Have you ever wondered how banks operate? How they take your money, keep it safe, and even help it grow? Well, strap in because we're about to embark on a journey to demystify the banking system. Firstly, consider the act of depositing money into a bank. What seems like a simple transaction is in reality a vital cog in the banking mechanism. When you deposit money, you lend it to the bank. This money then becomes a liability for the bank, recorded in their books as they owe it back to you. Now, here's where the magic happens. The bank takes your deposited money and lends it to others in the form of loans or credit. This is how banks create money. They charge interest on these loans, which is higher than the interest they pay you on your deposit. This difference in interest rates, known as the interest spread, is one of the primary ways banks generate profit. But lending isn't the only service banks provide. Banks also facilitate payments and transactions, acting as intermediaries to ensure money flows smoothly from one account to another. For these services, they charge fees, another important revenue stream. Now, imagine you have a substantial amount of money and aren't sure how to invest it. Banks offer wealth management services where they advise you on how to grow your wealth through strategic investments. Profits from these investments add to the bank's revenue. But banking isn't all about making money. It's also about managing risks. Banks face credit risk when borrowers fail to repay their loans, market risk from fluctuations in financial markets, operational risk from failed processes or systems, and liquidity risk if they cannot meet their financial obligations. To manage these risks, banks have robust risk management strategies and regulatory compliance measures in place. Banks must maintain a certain level of capital to absorb losses and protect depositors. They also have to comply with consumer protection laws, anti-money laundering (AML) regulations, and counter-terrorist financing (CTF) measures. These regulations ensure the banking system remains safe, secure, and fair for everyone involved. The banking landscape, however, is not static. With the advent of technology, banks are constantly evolving. Digital banking has transformed how we interact with banks, enabling us to conduct transactions at our fingertips. Moreover, banks are increasingly collaborating with fintech companies to innovate and provide better services. To sum up, banks operate by taking deposits, lending money, facilitating payments, and offering wealth management services. They generate profits from interest spreads, fees, trading, and investments. They manage various risks and comply with numerous regulations, and they continue to innovate with technology to improve their services. So the next time you deposit money into your bank account, remember, you're not just saving, you're participating in a complex, vital system that fuels the economy and helps us all prosper.